Okay, on behalf of the British-Kazakh Society, it's a real pleasure to welcome you to this third Oil and Gas and Renewables Group event and our second webinar this year. The subject will be the Kazakhstan Energy Overview. So it's not purely oil and gas today. So we have a very impressive panel and also a great moderator who actually managed one of the largest oil field developments in the country. I'd like to point out that the webinar will be video recorded, so you have the opportunity to go to the website after the event and catch up on anything that you've missed. So with that, I'd like to hand over to the today's moderator, John Morrow, BKS Society member and participant in the Oil and Gas and Renewables Group. John, it's all yours.
Well, David, thank you very much. So I'm going to moderate today, as David said, and we've got four great speakers. I'll introduce those now. I'll say a few words about myself first, and thanks for your kind words there, David. I started my career in oil and gas. I'm very much an oil and gas man, actually, in Shell, and then joined BG. I was there 10 years and was managing director for Karachaganak for that time, and spent obviously a lot of time in Kazakhstan, living there and also traveling in and out of Russia. I joined an AIM company after that for a short time on the board as a technical director. And then for the latter part of my career, I joined Glencore, where I was looking initially for new businesses in Kazakhstan for Glencore, and then became head of E&P. And I retired from there last year, and I'm now doing one or two NED roles and advisory roles, so trying to keep my hand in. I'm going to introduce the four speakers now, and then we'll go to the four presentations. Our first speaker is Livia Paggi. She's a partner and head of political risk at GPW, which is a London-based consultancy. Livia advises FTSE 100 companies on managing political, regulatory, and operational risks in emerging markets. Over the past decade, Livia has developed particular expertise on political developments in Russia and wider Eurasia, having lived and worked extensively in the region. She's a sought-after speaker. We're fortunate to have her with us today. She regularly provides commentary for the media, including the BBC, Sky News, Al Jazeera, CNN, and the FT. Livia has earned many awards for her political analysis, and most recently, she was named by Management Today as one of Britain's top women in business under 35. So welcome, Livia.
Thank you.
Our next speaker will be Paul Sampson. He's been writing about Caspian and Russia for more than 35 years, mostly for the Energy Intelligence Group in London. He's a fluent Russian speaker, and he was based in Moscow between 93 and 95, covering developments in the Russian oil and gas sector for the newsletter Nefte Compass. He then moved to London and wrote about the Caucasus and Central Asia. In 2000, he also started covering the Middle East, especially Iran, for the Energy Intelligence Group. For the past several years, he's been writing for EIG on other parts of the world, including Latin America and Africa. He continues to write regularly on Kazakhstan, Azerbaijan, Turkmenistan, and Uzbekistan, and works on the FSU and the Middle East for various consultancy groups. Welcome, Paul. Aida Sitdikova is Director, Energy Eurasia, Sustainable Infrastructure Group at the European Bank for Reconstruction and Development, where she heads a team covering a diverse group of transition countries in Central Asia, the Caucasus, Turkey, with a focus on power utilities and gas sectors. Aida has over 20 years experience in emerging market economies, working with both the private and public sectors and leading financings involving debt, equity, and syndications. At EBRD, Aida has led projects with a specific focus on energy and resource efficiency, renewables, and energy infrastructure, all underpinned by the bank's mandate of supporting energy transition to lower carbon economies. Under her leadership, the team has grown into a major player in the energy sector of Kazakhstan, Uzbekistan, Turkey, Georgia, Azerbaijan, and Tajikistan, with an annual volume of investments of over 600 million euros and a portfolio of 3.3 billion euros. Aida is spearheading policy engagement with respective governments to assist with establishing a national regulation in the area of renewables, cost-reflective tariffs, and commercialization of regulated sectors. Prior to joining EBRD, Aida worked in private equity. She holds a master's in business administration in international finance. Welcome, Aida. Our final speaker today is John Roberts. He's an energy security specialist with Methinks, focusing on the interrelationship between energy, economic development, and politics. He's a member of the advisory board of the UN Economic Commission for Europe's project on sustainable energy, and a member of the UN ECE group of experts on gas. He is also a senior fellow with the Atlantic Council's Global Energy Center in Washington, DC. John has particular expertise in the development of energy in Central Asia and the Caucasus, and in the pipelines designed to connect Caspian to Russia, China, India, and Europe. He is one of Europe's leading energy security specialists and has testified to UK parliamentary committees on Caspian, Russia, Middle East, Turkish, and Kurdish energy security issues. John has written some books, including Caspian Pipelines, published by the Royal Institute of International Affairs, and Visions and Mirages, the Middle East in a New Era. He's also the author of a series of papers published by UN ECE in 2020 on the role of natural gas in the energy transition. He's currently working on such issues as Caspian and Russian gas deliveries to Europe, the development of new supply pipelines and interconnectors within Europe, and the energy security implications of gas discoveries in the Eastern Mediterranean. Welcome, John. What I'd like to do is to turn to our first presenter, Livia, who's going to talk about the political overview. And I must say, I've got perhaps an interesting thought myself, which is what the impact of COVID-19 has been actually, and the resulting crash in oil prices on Kazakhstan. What's the outlook, Olivia?
Right, thank you very much for having me. So I thought I would just give you a brief overview, which can then go nicely into more detail when the other speakers go into different aspects of the energy sector. When the pandemic first hit, what was really remarkable, I think, is that Kazakhstan actually really showed itself to be a leader in the region in terms of response. It was the first country in Central Asia to lock down in March. And it also immediately, the government announced a big stimulus package. That said, although Kazakhstan was initially ahead of the curve in terms of shutting down in response, in some ways one could argue that the opening up was a little too early in June, and there was immediately a spike again, which required the country to lock down again, which the country is now just exiting. So today, officially, according to official stats, we have about 100,000 reported cases and 2,000 deaths. But like in all countries, these numbers aren't perfect and often tend to be higher than what is actually announced. Tokayev was very impressive in the sense that he announced a $10 billion stimulus package to support the economy, which is approximately 6% of the country's GDP. And in comparison, for example, it was more than what Russia did. Russia's stimulus measures were around 4% of GDP. But then if you take the other extreme, Germany's package amounted to 33% of GDP and the US 12%. So what the package really focused on was in maintaining household economic welfare, so actually providing cash transfers to the unemployed, and it was one of the only countries, I think, in the region to do this. Ease household expenses, that means covering utility bills, asking banks to reduce penalties for late payments, and also protecting businesses in terms of reducing tax for them, for small businesses and for SMEs. And also they made great efforts to ensure the currency stability. And again, as I said, compared to other Central Asian states, Kazakhstan was quite generous in its package, and this is obviously in part due to the cash that it holds in its national oil fund. So what has been the impact, though, however? I mean, it's really, the perfect storm for Kazakhstan. We had not just COVID, but also the collapse in oil prices. And it really did, in spite of this good response, it did hit the country hard. It's the largest hit to the Kazakh economy in 2 decades. And according, I think, to the World Bank, the economy is expected to contract around 3% this year. That said, again, the Kazakh government has exceeded its expectations in managing the crisis by drawing on its national reserves and implementing a relatively prudent monetary policy. To give you a sense of how big, however, the impact is that we have to remember that Kazakhstan remains heavily dependent on oil and gas production. It makes up 45% of the state budget, and and Tokayev's last budget approved the balance at $55 per barrel. And when OPEC Plus in March and Russia didn't come to an agreement on production cuts, oil crashed below $20 per barrel. So that gives you a sense of how big the hit was. Furthermore, looking forward, Kazakhstan has agreed to the OPEC Plus agreement, which is is reducing oil production and exports by around 20%. That said, the use of the rainy day fund has really helped the country manage the crisis in the short term. And of significant note, Kazakhstan managed to keep its sovereign rating, and this was in part due to the fact that oil prices recovered above $40 a barrel, but also really due to its limited external debt and strong governance of the national fund and savings. So I think the rainy day fund has something along the lines of $65 billion, which it can tap into in the short term. It's used up about $3 billion, and it's planning to spend another $4 billion. So again, in the short term, the country will likely be able to weather out the crisis. However, if oil prices don't fully recover, that's going to be a serious challenge in the medium term. From a political point of view, Tokayev has really used this crisis to consolidate his position as a leader of the country. And, although the true test comes on the extent to which he's able to oversee the recovery, so the difficult part is going to be right now when they can't keep giving out handouts to the population. I would say that, Tokayev has really taken ownership, and, if the criticism of Tokayev before was that, it's not really sure who's still leader of the country, whether it's Nazarbayev or Tokayev, he's really become face of the crisis. And we've seen Nazarbayev somewhat fall behind the scenes in terms of, how vocal he is on managing it. Tokayev's taken a number of steps which have consolidated his position, including removing an influential position from the head of the Senate. He's also replaced various ambassadorial positions. And we've seen him slowly consolidate it. So when he came in 2019, according to some polls, over 70% of the population supported Tokayev. However, as I just recently mentioned, the hardest part is what's going to happen now. So in a recent poll, again, about 68% of the respondents said that they saw their incomes fall, which is a major blow. And also approximately 45% of the population said that a lot of things were still left unresolved. So in some ways, there's a huge question mark about what will happen next. And according to the World Bank, there's some indication that the poverty rates could raise from 8 to 12%. Again, that means that there's going to be a number of social political issues he's going to have to navigate further. Tokayev recently gave his the State of the Union speech last week, and again, what was notable about it when he first came in as president, there's a lot of the talk was on political reforms and how do we, an emphasis on pluralism. Now it was really a speech about crisis management, which is understandable given the times that we're in. No real concrete policies were articulated. It was more about how do we hold the ship together. But there was a couple of points of note for foreign investors. which I think we need to keep on the lookout for. And these include possible revisions of the tax code with increases in tax. It's still too early to see, I think, what sector is going to be hit, but we can expect extractives. This has generally been traditionally the area where the government's gotten additional funds from increasing various taxes. There were also, he mentioned there's going to be an increase in local content. Again, not new for the extractive sectors, but there's likely going to be, again, additional pressures for hiring local companies as the country weathers this crisis. Also, although this wasn't specifically mentioned, but given the issues around education, there's going to be further pressure on companies, foreign companies, to train up local Kazakhs and, diminish the education gap. So I guess in sum, the conclusion is that the country has shown itself a leader in the region by acting swiftly through national reserves and sound policy, and which has acted as a strong buffer to the economic crisis. Tokayev has consolidated his position, but there's still the hardest bit is now to come, what happens in the next 6 months and what the recovery is going to look like. And there's really two key unknowns for the country, which is what's going to happen to oil price and whether Kazakhstan's really going to be able to contain the outbreak as we enter the winter period. So these are two factors that remain big unknowns. So I will finish now, and I'm happy to take questions after the presentations.
Okay, thank you, Livia. Thank you very much for that. We're going to go on to our next speaker now, Paul Sampson, who's going to talk about what's happening in the current environment with current developments and what the outlook is there. Thank you, Paul.
Thank you, John. First of all, many thanks to David Skeels for allowing me to speak for the first time to the British-Kazakh Society. David and I think, first met in Kazakhstan in probably about 1994, when we were both young, and have known each other ever since. I'm going to talk about the current state of Kazakhstan's oil and gas industry, with a particular emphasis on the three giant projects of Kashagan, Tengiz and Karachaganak, which together account for more than 2/3 of the Republic's current oil production capacity of around 1.8 million barrels a day. It is on these three developments that most of the foreign investment in Kazakhstan's energy sector is concentrated, and upon which rest the Republic's hopes of increasing oil production over the next decade. But first, a quick update on where things stand at the moment on a macro level. It is not a pretty picture. The turmoil of the past few months caused by the oil price crash and the coronavirus pandemic has exacted a heavy toll on Kazakhstan's oil-dependent economy. At the start of the year, Kazakhstan's budget was based on an average oil price of $55 per barrel, which was viewed at the time as quite conservative. This spring, the Kazakh government downgraded that figure to $35 per barrel, and have also applied it to the three-year budget running from 2021 through 2023. On a corporate level, plans by sovereign wealth fund Samruk Kazina to sell shares in its subsidiary, state oil company Kazmunagas, via an initial public offering, have been pushed back at least a year until 2021. Kazmunagas's net profits in the first half of the year plunged over 96% compared to the same period last year. Kazmunagas has slashed its costs, laying off hundreds of people at its headquarters in Nur-Sultan and cutting the pay of some of its senior executives. Expect this trend to continue in the coming weeks, months, and possibly years. On the ground in Kazakhstan, COVID-19 has spread like wildfire in the western oil region of Atirau, and since March has infected close to 3,000 workers at the Tengiz project alone. But we are now seeing signs of improvement as the government gets a grip on the pandemic, though a spike in infection rates as the colder weather approaches cannot be discounted. Another key development, which the previous speaker touched upon, is that Kazakhstan has had to reduce its oil production by around 20% since May, as part of the OPEC plus cuts. Kazakhstan's share of these cuts in the region of 300,000 barrels a day has come from its two largest fields, Tengiz and Kashagan. Needless to say, this has not gone down well with the field's operators, which for obvious reasons want production to be as high as possible as they seek to recover the tens of billions of dollars that they have invested. So let's return to these mega projects and look at the progress that they have been making. By far the most successful of the three is Tengiz, a project which dates back to April 1993, when Chevron and the Kazakh government signed a joint venture contract to develop the field. Since then, Tengiz has been a lifeblood for the Kazakh economy, providing the treasury with more than $130 billion in taxes and royalties, including $3.9 billion during the first half of this year. It remains a vital source of production for operator Chevron, with production averaging around 650,000 barrels a day in the first quarter. And if all goes to plan, output will increase by 30% in the next few years as Chevron and its partners put the finishing touches to a third and final expansion project. But it is not sweetness and light at Tengiz. At the end of last year, Chevron confirmed that the cost of its expansion project had risen some 25% to $45 billion, which obviously means there will be much greater costs to recover. At a time when all the oil industry majors are cutting their capex, these extra costs could not have come at a worse time. By contrast with Tengiz, Kashagan has flattered to deceive from the start and has been a huge disappointment both for Kazakhstan and the consortium of 7 companies that jointly operate the field. The economics are pretty awful. Since the production sharing contract was signed in late '99, the partners have spent close to $60 billion in capex, and production only began in September 2016, almost a decade later than planned. Though production has reached a phase 1 plateau of around 400,000 barrels a day, there is little scope for it getting much higher. The costs of a phase 2 development that could more than double production would be exorbitant, especially at today's oil prices. And none of the partners has the appetite to spend more money. Kashagan, alas for Kazakhstan, will never reach its full potential, at least not in my lifetime. I hesitate to talk about Karachaganak, as our moderator knows more about it than just about anybody alive, having been at the coalface for many years. But I would say that by and large, it has been a success, providing both the government and the consortium, co-led by ENI and Shell, with a steady flow of profits. Karachaganak remains Kazakhstan's single largest gas producer, with production of around 18 billion cubic meters per year, but most of the project's value comes from the liquids it produces and exports. During the remaining years of the project, without getting too technical, the focus will be on re-injecting more gas into the reservoir to keep oil production steady and profits flowing. And both the Kazakhs and the partners will want to avoid any further legal spats, having squabbled for many years over the profit-sharing formula. It feels more and more that when it comes to oil and gas, the good times are over for Kazakhstan and all other oil-producing countries, and that the challenge will get progressively tougher. It is, of course, impossible to predict the future. We saw coronavirus coming after all, but it does feel that we are entering a new era in which oil and gas has lost its appeal as the major companies, at least in Europe, switch their focus to alternative forms of energy. In Kazakhstan, the days of exploring for oil and gas in the Caspian Sea are basically over. The costs and risks are too high, as Kashagan clearly shows. Apart from Tengiz, onshore production has peaked, and we can expect natural declines at fields operated by Kazmunagas to accelerate in the coming years. Gas output will remain stable, and Kazakhstan will remain a key overseas market, but there too the best days are over. Kazakhstan's challenge is now to accelerate its push for renewables and provide tax and other incentives that will encourage the major oil companies and other players to invest billions in new climate-friendly projects. That's it. Thank you very much, and I'm happy to take any questions.
Paul, thank you very much. And well, thanks for the compliment, actually. But thank you very much. And very informative. Thank you. I want to turn now to John, who's going to talk on energy security and the pipelines business, particularly, which is something that interests me greatly. But over to you, John.
I'm actually going to talk about two sort of rather different elements. There's not much about pipelines to say at the moment, but there's quite a lot to say about China and the use of existing pipelines. The other element concerns the future of energy as a whole, namely the impact that renewables might have on conventional energy. First point I'd say about China is, to the Kazakhs, is China a market or a threat, or of course a combination? Why might China be considered a threat? The Kazakhs, and I've had this told to me by a very senior Kazakh official, are always cognizant of the fact that every year China's population increases by more than the total population of Kazakhstan. It is their big brother. When they settled the border in the early 1990s, there were tremendous protests over the fact that something like 500 square kilometers of territory were, from a Kazakh perspective, handed over to China. How much today must they be thrilled that they don't have a border problem with China when they look and see the problems that China and India, or the troubles that China and India are facing along their common border? They have a problem, though, in terms of exports. The Chinese seem to be changing their energy strategies. They import a lot of gas, and they will continue to import a lot of gas. But they also seem to be placing a considerable emphasis on burning coal, but burning it away from the population centers so that the pollution to most of the population is limited. It's also a buyer's market for gas. So therefore, how worried should the Chinese be about possibly limited LNG supplies? No, not very much. And the result of that is that they are downplaying their pipeline supplies from Central Asia. Most of these, of course, come from Turkmenistan, but it's quite noticeable that there's been a small drop in gas exports from Kazakhstan. Likewise, in this regard, you notice that although gas production in Kazakhstan went up by 4% in the first half of this year compared to last year, gas transportation was down by something like 15 to 20% on the various pipelines. That almost certainly reflects what Paul was saying, increased use of gas for injection into fields. In this environment, what is the future likely to be for fossil fuels? Before COVID, there was an assumption that the Kazakhs really did pay more than lip service to their idea of a green revolution. They were looking to have 10% of their electricity come from renewables by 2030. They may well get to that, but they will probably get to it not because of fossil fuels running short, but simply because fossil fuels don't necessarily reach all the parts of the country that renewables and decentralized energy systems can reach. So there's still scope for renewables, whereas with fossil fuels, the investment they need, particularly for gas, is heavy. And these are not good times to be raising money, borrowing money, or using your financial reserves. So I think we are going to see a leaner Kazakhstan, more emphasis on decentralized energy, not least particularly as prices of photovoltaics and wind power come down. And all this will be to the long-term detriment of the classic financial support for the state. But if that support is down anyway because of loss of prices, and if it saves on investment, it may be a long-term gain for the Kazakhs. I don't think I'll say much more. On pipelines, there's no real prospect that there are going to be any expansion of pipelines. There will be some improvement on existing systems to ensure that the cross-country gas lines are more effective and that they have a proper connection between Karachaganak as a gas producer and the consumption areas of the southeast. But that's about it. We're not seeing any major investment in infrastructure in the near future. And I'll stop there.
Thank you, John. Thank you very much. So lastly, we're going to go to Aida, who's going to talk about, among other things, about the status of sustainable energy in Kazakhstan. Hello, Aida.
Hello, John. Thank you very much for this opportunity. I have to say, when I saw the title, Oil and Gas and Renewables, I had some trepidation before coming onto this panel, but maybe I shouldn't have had. You might have seen last week in the news, there was a meeting between the Minister of Energy of Kazakhstan and President Tokayev, and the agenda basically had, as reported by media, had 3 points. One was advancements of oil and gas exploration and production, Tengiz was mentioned. Second was state of play with refineries in the country and rehabilitation. And number 3, there was the current status update on the newly built renewable capacity in the country. So renewables are clearly becoming mainstream in Kazakhstan and have a firm place on the agenda at the top level. I also remember, this was difficult to imagine just 2 years ago. I remember at the beginning of the lockdown, there was another speech by President Tokayev where he did mention the need for green recovery in decarbonization as the country actually went into lockdown. So why such shift? Rapid economic growth in Kazakhstan over the past decades has brought a sharp upswing in electricity consumption. The country, of course, historically looked to meet its increasing demand by coal and coal resources. It is still 70% of the generation mix in the country. Kazakhstan is also, of course, a major energy exporter. In 2018, it was the world's ninth largest exporter of coal, 9th largest of crude oil, and 12th of natural gas. So meeting more of its domestic energy demand through plentiful and affordable, now very affordable, renewable power, rather than heavily subsidized fossil fuels, can deliver a range of environmental, health, and most importantly, economic benefits, and free up more fuel for export if needed. The economic arguments for moving away from domestic consumption of fossil fuel are strong. For instance, Kazakhstan could see its fiscal revenues drop by around 40% versus business as usual should its oil exports be hit by countries adopting greener energy strategies under their Paris Agreement commitments. This is according to EBRD research. So this could lead, of course, to unsustainable levels of debt and potentially deplete the country's national savings from oil within a decade, 10 years. In this sense, recent volatility in the oil markets as a result of the COVID crisis is just a preview of what is to come and may encourage the government of Kazakhstan to accelerate the transition to renewables and energy efficiency programs that are already underway. Certainly the economic damage wrought by the coronavirus presents an opportunity to what we call build back better by ensuring that the recovery is actually green. Kazakhstan's international partners must provide the financing and support to ensure the momentum built up over the last decade is not lost. So things are changing already as Kazakhstan adopted its green economy transition concept, as the country signed up to the NDC's nationally determined contributions under the Paris Agreement and started implementing those. The country is a fertile ground for significant increases in renewable energy generation with enormous untapped potential. In the last 6 years, we at the EBRD financed 12 renewable energy projects in the amount of about 400 million euros and totaling about 600 megawatt of installed capacity in the region. It was primarily solar PV. Last year, the EBRD Board of Directors approved 300 million euro phase 2 for renewable framework in Kazakhstan. And this is phase 2 after phase 1 of 200 million euro was successfully utilized. So we expect this will capitalize the next wave of renewables development in the country, including focus on supporting renewable auctions that do tend to deliver a much lower price from the feed-in tariff times that we've helped Kazakhstan establish years ago. The drop in prices that we are seeing are about 30%, 45% in some cases. So it really is becoming an affordable and readily available choice. Cooperation between the government of Kazakhstan and EBRD goes back to 2008. So it did take some time when we signed our first Sustainable Energy Action Plan. But since then, a lot of things has happened, and the rhetoric, as many things in Kazakhstan, tends to become a reality. So we're very happy to see that. This was also seen by major climate funds who we attracted into the country, including Green Climate Fund and Clean Technologies Fund, which supported those first projects, renewable projects, with their concessional funding alongside the EBRD financing. Collectively, this support enabled the sector to attract billions of dollars of clean energy investment since 2013, reaching just 0.8 billion in 2019 alone. So the renewables are picking up. Investors have included further multilateral development banks and funds and a wide array of international private companies from China, France, Germany, Bulgaria, United Emirates, and the UK. The new market-based auction regime has attracted further interest. So we see competitive bidding for renewable projects has resulted, as I said, in much lower prices. So we are, of course, supporting the country's ambition to do more. We can't say it's an easy task, and there are constraints currently present in the sense of how much the electricity system of Kazakhstan can absorb. So, but that doesn't mean that we have to stop financing renewables or that Kazakhstan has to stop renewables. Kazakhstan has to start working on how to absorb the intermittent capacity coming online within the existing electricity grid and with the existing conventional power sources. What we see in terms of linkages to the oil and gas and fossil fuel sector, we see gas as a transition fuel. And in the case of Kazakhstan, gas is a much lower carbon alternative to coal, which is both CO2 emissions and local pollutants. Just think the city of Almaty and it's this black cover over it. So gas might be an interesting proposition. We know the country is working on switching its capacity from coal to gas. There's a pipeline, Sararka pipeline, being built. And we hope that that would help the country to decarbonize to some extent. Gas generation is also could be useful for the support, as a baseload support for the intermittent renewables. And that's also something to keep in mind when developing the gas sector. Finally, the gas pipelines that the country is working on should not represent a locked-in or carbon lock-in or stranded assets. And in that sense, it's of course important to build those pipelines in a future-proofed way, meaning that as Kazakhstan moves into the future and as more low carbon fuels coming online, that infrastructure can absorb those low carbon fuels like hydrogen or biomethane. It might sound a bit futuristic, but Kazakhstan has started thinking and planning ahead. Just look at Europe. Thank you.
Aida, thank you very much. That's our 4 presentations now undertaken, and thank you to the presenters. What I'd like to do now is to go to our Q&A, and we've got a number of Q&A questions. And what I'm going to do is pick some of the questions asked and direct them to a particular presenter. But I must say, if other presenters have something to add and say, please jump in and do that. So the first question that I see that I'd like to put here is to Livia, and the question is from Bruce Gaston, and it's as follows: given US-China decoupling, how do you think this will impact UK participation in the Kazakh oil sector?
Right. That's a good question. So I guess a lot of it is going to actually depend what the US election outcome is going to be in November, because it is really Trump that's dictating the China policy at the moment and setting the terms for how other countries need to be acting. I mean, although we've seen the UK pay lip service to it and has obviously concerns over Huawei and all of that, I mean, I can't really say I've seen a strong UK policy on China, so I don't see it directly impacting its activities in the Kazakh oil sector. Obviously, if the UK is going to pair up with Chinese investors, there'd probably be a little bit less publicity around it. But I really think, until sort of after November, it's a bit unclear what the immediate impact will be.
Okay, thank you. Livia, I've got a second question for you from Neil Carmichael. Tokayev's early career, particularly during USSR time, he was a China specialist, and indeed, I know him, and he has absolutely fluent Mandarin skills. And these Mandarin skills are one of the results. So how overall, given he's prime minister, is the relationship with China going now?
Tokayev in his recent speech did give a sort of, nodded on the importance of the One Belt, One Road project. And, China is still realistically going to be at the forefront of the investment agenda, simply because it's one of the only countries that has the ability to continue to heavily invest in Kazakhstan, let's say, versus what we see Western companies doing or Russian companies. That said, there have been some recent tensions between the two countries, in part because of what's happening in the Xinjiang region and Kazakhs being implicated in Western China. And also there's been sort of a recent cloud of fake news articles coming out where allegedly Kazakhstan is going to be sucked up into China. So there are some political tensions at the moment, but ultimately Kazakhstan is dependent on the investment. And as you've mentioned, Tokayev is a China expert and recognizes the importance of that relationship.
Mm-hmm. Oh, thank you. Thank you.
Can I jump in? Can I come in?
Yes, please do. Please do.
It's not just that Tokayev is a China expert. It's that he's an expert who understands the complexities of a country that is sandwiched between Russia on one side and China on the other. That sandwiching makes Kazakhstan a particularly difficult place in which to consider investments if you don't take the geopolitical aspects into account. He is going to be extremely cautious in how he handles China because he knows what the potential is for trouble. But he's going to have to work out how he also copes with domestic concerns. Livia alluded to the repression, not just of Uyghurs, but of Kazakhs in Xinjiang. This is going to cause problems. That's why I stressed the importance that they actually had a defined border, which is something I know that Tokayev has placed enormous emphasis on in the past. But I think it's going to be very difficult to attract fresh investment on the scale that they had in the past because of the way in which Kazakhstan is sandwiched. And also, I think it's important to note the Chinese themselves seem to be somewhat ambivalent to Kazakhstan. They've had problems in October They've had problems in the way in which their operations have been seen as being semi-colonial with workers' protests against them. And the result of that has been that exports from Kazakhstan of both oil and gas have not been as high as expected. And that it'll be worth keeping an eye on whether that is proving a downward trend. It's possible.
Thank you, John. Thank you very much. I've got two questions now on Karachaganak, which I'm going to combine, from Alexander Hosnikov and Anna Kerod. Paul, maybe, I don't know whether you can say something on this, and this really is pointing towards any further development of Karachaganak. I mean, these large fields, all three of the large supergiant fields in Kazakhstan have further development potential. Where is Karachaganak going next, given that phase 3 and further gas development has been put off a couple of times?
Yeah, I think Karachaganak, as I said, it's actually generating quite good cash flow even at today's prices for the contractors and for the government. So I think probably neither side. I mean, as I say, there's been this commercial dispute which has been dragging on for a long time. But I think in the end, neither side really want to rock the boat too much, and they want to keep the status quo. I think they have to invest, I think it's up to $5 billion in drilling new wells and building new infrastructure. But in the larger scheme of things, it's not that much money, and I think they can just manage operations steadily over the next few years. But there certainly isn't the same level of expenditure that, say, the Kashagan partners have had to spend, and certainly not with TCO.
Yes. I think, if I could say something on this myself. I mean, I think knowing Karachaganak and particularly the geographical environment around Karachaganak and the position of the pipelines, it is relatively more cost effective, depending on price, of course, at the end of the day, but more cost effective to expand the field, particularly through drilling, than some of the other fields. So it's there could be some further development there, which is cost effective even at lower oil prices. I've got a question also, Paul, perhaps for you, from Ali Kuspanov, switching to Kashagan, and you mentioned this, but he asked, maybe you could say a bit more about this. The full field development program, will it ever start? And perhaps if it's not full field, is there another phase coming, or is it really difficult to see something further coming along there?
I don't think so. Full field development, I don't think so, because the extra cost would probably be upwards of, people are saying, over $100 billion, and that's just that nobody wants to spend that kind of money. I think probably the best realistically you can hope for is that it can push production up to 500, well, from 400 at the moment to 500 within the next 2 or 3 years through debottlenecking and I think more gas reinjection. But if I were a betting man, I would say it's, I mean, the odds on any further expansion are extremely unfavorable. And I think the Kazakhs realize that, although they may not say it openly, but I think Kashagan has pretty much reached its potential.
Yes, an amazing situation, actually, given the size of the field. But certainly some further expansion, building on the, if you like, on the existing facilities and using them, as opposed to building more. That's your thought. Yeah.
Yeah.
I have a question to Paul. Is there any prospect of developing Kashagan's gas?
That's a good question. I mean, there's associated gas. Quite a lot of associated gas that's coming out, and I think it's now actually the third largest gas producer in Kazakhstan. But it's the problem with some of the gas is used for reinjection, and the rest of it, I'm not sure how easy it is to monetize it. I think it's sort of sour gas, so it needs treatment. But I'm sure and I'm not entirely sure whether the gas is a property of the if the Kazakhs have exclusive rights to use the gas, but I think some of it is used for domestic purposes. But yeah, you're right. There is a scope for doing more to develop it or to monetize it. So maybe that China is the obvious market for any surplus gas in Kazakhstan.
Thank you, Paul. I've got this. I'm going to go to two more questions, and then we'll wrap the session up. The first one is from Neil Carmichael and Aida. What is the status with the COP26 submissions from the countries of the region, Central Asia, not solely Kazakhstan, but including that?
Yes, very good question, because we were involved in the Paris Agreement NDC's design by the country. We helped the Kazakhstan and in other countries in the region to design them. At the end of the day, this is sort of a sovereign call. This is what the country think they should be comfortable with. In the case of Kazakhstan, I have to say that maybe the Kazakh government was a bit cautious in its aspirations. So it's just 3% basically of renewables by 2020. Whereas we see in the neighboring countries, Uzbekistan are planning to introduce 8 gigawatts of renewable wind and solar by 2030 already. And that's a much larger percentage. So, but then again, there's a disconnect of how much they want to commit that in the COP26 revised commitments. So overall, the expectation is that given the Covet and given the need for green recovery, the countries in the region will become more ambitious in their green agenda, and they will because they also see what's happening in the fossil fuel space, as we just discussed so brilliantly today by previous speakers. The expectation is that there will be an update, and hopefully more ambitious for COP26 commitments. There's a second question, John. Shall I just answer that? Shall I read it out, or you gonna?
Yeah, please read it out. And,
it's an excellent question. Will COVID recession delay or speed up renewable energy development in Kazakhstan? At the beginning of the lockdown, we were really concerned that there will be disruptions in supply chains, including from China, because that's where the COVID originated. And then we basically saw that it is not impacting the supply chains, the even installation works in the country. We're actually now hoping for this, for build back better phenomenon that is happening in Kazakhstan, where the country will understand that the new normal would involve cleaner fuels on a larger scale, and the renewables will actually be picking up, especially as they are becoming cheaper than fossil fuels at the grid parity level, and they are much cleaner, of course. Thank you.
Well, thank you very much, Aida. I want to wrap up the session now. I'd like very much to thank our presenters for their very interesting presentation, and indeed their interesting responses to the questions, and the question quality was very good, and thank you for the participants for that. I'd like to thank the participants, you all, for joining us today, and I look forward to further sessions at BKS, whether it's oil and gas renewables or whether it's other subjects, and I really commend those to you. So with that, I'd like to wrap up and pass back to David Skeels just to say a few words before we sign off. Thank you.
Well, thank you very much, John. Thank you for a great moderation role, and thank the panel for, I guess, what should we say, pertinent interventions. I also would like to thank the person who you can't see, and that's Jean-Toi Jumenalin, who is managing the behind-the-scenes issues for the webinar, which is a very, very important role. And obviously, as John says, thank the audience for joining us today. As far as future events go, we do have one planned for the oil Gas and Renewables Group, which will be November the 19th, or plus or minus, and that will be targeted particularly on renewables as we're following, I guess, trends of interest. In addition, later in the year, we'll have agribusiness, mining, and financial services webinar events. So we encourage you to look at the website, see what events are planned, join the society, and we look forward to seeing you at the next event. Thank you very much.